When trading with low frequency in FX, you need to perform multi-time frame analysis by observing multiple time frames simultaneously. This time, I'll share tips on how to perform multi-time frame analysis and how to handle it when you're not good at it. First, confirm the long-term trend. When doing short-term day trading with multi-time frame analysis, always start by confirming the long-term trend. For me, long-term charts are the 1-hour to 4-hour charts. For example, if I check the charts first thing in the morning, I start by looking at the 1-hour chart to see the overall trend. Let's say the 1-hour chart looks like this. If the chart image shows higher highs and higher lows, I determine it's an uptrend. Therefore, for short-term day trading, I basically only consider buy entries. This is because going against the overall trend and aiming for a reversal increases the likelihood of losing. And next, if there's a place near the current rate where a horizontal line can be drawn, draw a horizontal line there. For example, like this. By doing this, you can recognize whether it's a dry area or a moist area, and identify rough entry points. By the way, regarding pressure transitions, I don't look at them in detail. I only switch to the daily chart once a day to quickly check if there's a strong support or resistance nearby. In short-term day trading, trades often end within the day, so looking at daily or weekly charts doesn't significantly impact the trades. Next, check the short-term chart. After confirming the long-term trend and drawing horizontal lines, proceed to check the short-term chart. Since I mainly use the 15-minute chart, I switch to the 15-minute chart. Then it looks like this. From here, just like with the long-term chart, confirm the overall trend and draw horizontal lines where possible. Looking at the current short-term chart, like the long-term chart, it shows higher highs and higher lows, so I determine it's an uptrend. Regarding horizontal lines, in addition to the places drawn on the 1-hour chart, you can draw them below the 15-minute chart as follows. After checking the short-term chart finally, as a summary, reconfirm the long-term trend, short-term trend, and whether to buy or sell. In this chart, since both the long-term and short-term trends are up, I aim only for buy trades. As for where to aim for buys, since horizontal lines were drawn on both the 1-hour and 15-minute charts, I set a scenario to buy if the rate drops to either and shows signs of stopping. By doing this, you can synchronize multiple charts for trading. As for entries, do it in a way that's comfortable for you. It's okay to enter as you see fit. In my case, if I were to enter in this situation, I would lower the time frame to below 5 minutes to find entry points. For example, when the rate reaches the first horizontal line, if it looks like this on the 5-minute chart, and if it seems to bounce, I determine that the 1-hour horizontal line is effective and aim for a buy entry. Now, let's look at the next candlestick. It didn't react at the 1-hour horizontal line and broke below. Instead, the rate dropped to the horizontal line drawn on the 15-minute chart. If it reacts here, I see that the 15-minute horizontal line is effective and rotate. Proceed with the entry. Now, let's look at the next candlestick. A bullish candle appeared, so it's possible to think that it reacted at the 15-minute horizontal line. Therefore, a buy entry can be made on the next fast 8. However, in my case, I want to improve the accuracy of the entry, so I don't enter yet and wait a little longer. If it seems like it won't drop further, I'll enter. In this situation, if you watch the 5-minute chart for a while, it moves like this. After bouncing at the 15-minute horizontal line, it started to rise again without reaching the horizontal line, right? Moreover, if you look closely, it seems to be forming a double bottom. Therefore, seeing it as a reversal sign, I'll enter on the next candlestick. The stop loss at this time is below the 15-minute horizontal line. If it breaks below here, a short-term downtrend will occur, so it might continue to fall. Regarding taking profits, you can aim for the recent high or aim to break the high if you want a better risk-reward ratio. In this situation, since both the long-term and short-term trends are up, it's easier for the price to rise. This means you can extend your profits, so I would aim for at least twice the stop-loss width for taking profits. Looking at the subsequent movement, it turned out like this. Indeed, when the long-term and short-term trends are in the same direction, it tends to extend significantly. By synchronizing multiple time frames like this, you can trade successfully in short-term day trading. Many people find multi-time frame analysis challenging, but if you check the charts step by step, combining multiple time frames for judgment isn't that difficult. Also, when doing day trading, if you want to enter at a closer point, when the long-term and short-term trends are opposite. In the chart image explained earlier, the long-term and short-term trends were in the same direction, right? In such cases, there's basically only one entry, so there's not much to be confused about. However, when the long-term and short-term trends are opposite, synchronizing multiple charts for trading becomes a bit more challenging. For those who find multi-time frame analysis difficult, this is probably the reason. For example, this chart is a 15-minute chart. Looking at it, it's an uptrend, so you think of making a buy entry and aiming to break the high to extend profits, right? But looking at the subsequent movement, it turned out like this. It was held back at the previous high and then fell significantly. The reason is clear if you look at the 1-hour chart. Actually, on the 1-hour chart, it's a downtrend with resistance. The buy entry was made near a resistance on the 1-hour chart. Therefore, even if you make a buy entry on the 15-minute chart, the profit doesn't extend and it ends up being a stop loss. When the long-term and short-term trends are opposite like this, many people get confused and make entries in the opposite direction of the trend, resulting in losses. As a countermeasure in such situations, always focus on trading in line with the long-term trend. In this case, only consider selling near the red line on the 1-hour chart. By doing this, you can narrow down your focus to one target, eliminating confusion. If you make a buy entry in line with the short-term trend, it's basic to limit it to the long-term resistance. However, if you're not used to analyzing multiple charts, first focus only on entering in line with the long-term trend. For example, in this situation, you can enter at the place where the 15-minute chart makes a lower high. At this position, it's making a lower high and forming a large double top. Therefore, it's clear that the buying power is weakening, so you can make a sell entry at the yellow circle. If you want to be safer, you can also sell after the double top is formed. Here, the double top is completely formed, so even at the 15-minute level, it failed to break the high. This fact is established, causing many market participants to have a sell perspective even at the 15-minute level. This results in a sell perspective on the 1-hour chart, a sell perspective on the 15-minute chart, and so on, making it easier for the price to fall as both long-term and short-term perspectives become sell-oriented. Furthermore, in this situation, if you want to be even safer, you can draw a rising line on the recent upward trend and wait until it breaks before entering. With this method, even in the recent trend, it's a place where the upward trend breaks and enters a downward trend, so the safety level is quite high. However, the safer you go, the worse the entry position becomes, and the stop-loss width also increases. Consider your acceptable stop-loss width and angle while deciding where to enter. By waiting until the short-term trend aligns with the long-term trend, even if they are opposite, you can trade without unnecessary losses or missed entry opportunities, reducing confusion. See you in the next video. If you found this helpful, please like and subscribe to the channel.